Hello, CoinDesk Live. This is Will Foxley, tech reporter here for the Eth2 conference. That's right, Ethereum is 5 years old this month. Might be a little bit crazy if you've been in the space for a while. Today, we're joined by a few DeFi characters, namely Robert Leshner of Compound Finance, Hayden Adams of Uniswap, and Rune Christensen of Maker DAO. Thanks, guys, for joining us today. I think we're all kind of jumping in right now, but just to give an overview of the week and what we've seen so far, Ethereum has turned 5, and a lot has happened in the last 5 years, from stable coins to DeFi. We're all over the place, and we're thankful to sit down with 3 astute characters within the scene. I think we're just going to start with, where were you guys at when Ethereum launched? Where were you as a person? Did you know about Ethereum? Did you not? What were you building or working on at the time? Was it even related to cryptocurrencies? So Hayden, can we start with you?
Yeah, definitely. When Ethereum launched, I was in college and I didn't know a ton about it. I actually was not, a lot of people in the Ethereum space were originally in the Bitcoin space and kind of moved over. I didn't have much interest in Bitcoin either at the time. I did have a friend named Carl who was very, very into Ethereum and would talk to me about it every single day. But I wasn't sure about it. And, I didn't really become interested in it until around 2017, a few years later, as, Ethereum started to take off a little bit further and get some more action. So that's when I kind of first became interested.
Awesome. Well, thank you for that. Let's move over to Robert. Robert, where were you when this all started?
I was not in the crypto space professionally at the time. I was, in a Silicon Valley startup. And I remember reading the Ethereum white paper on Hacker News. I knew about Bitcoin. I generally had seen a bunch of altcoins come and go. And I remember reading the Ethereum white paper and thinking to myself, wow, that's really complicated. There's no way that this is going to ship. And then it did ship, and it was, this sort of impressive moment to see, a blockchain capable of supporting smart contracts go live. And, it was, obviously extremely early. A lot has happened since then, but it was really like an awe-inspiring moment.
That's awesome to hear. Christian, what do you have to say? Where were you when Ethereum launched? I heard recently Camilla Russo's book that you were somewhere in China or the Netherlands at the time.
Yeah, I mean, I remember when we went from I guess it was called the Frontier network or something like that, the initial test net where there were actual real mining rewards back in the early days of Ethereum, and then the real network got turned on. Yeah, at the time we were actually already, like me and the other co-founders were actually already in the trenches working on Maker and trying to get all this stuff to work. And it was a very different experience than working in Ethereum today, that's for sure. It was like a very different community, and the technical tools and sort of the environment of working on it was just, yeah, completely unlike what it's become today. And it's pretty funny. It's pretty fun to have been a part of that journey. Also, another thing to mention is that Maker is one of the few projects that were like listed on the original, very first Ethereum website as like project support, projects built on Ethereum or something like that. And that's always something I like to really bring up, because there's Augur as well, and I'm pretty sure every single one, or more or less every other project on that list, they're dead now. Not that many from the early days made it through all these years. But yeah, it's been quite a journey.
No, that's a great place to pick up, because Augur just launched, as we saw yesterday, 5 years after their ICO on Ethereum. And one thing that I think was pretty interesting, just kind of digging through the old Augur material, was that they tried to initially build it on Bitcoin, and it took 6 weeks to build a specification working with Paul Strzok's Truthcoin, but it didn't end up working. And so they pivoted to Ethereum after talking with Vitalik. And they built their specification in 36 hours. So from maybe a technical or even a philosophical standpoint, what makes building on Ethereum a magical experience or a more easy experience compared to other blockchains, and why can you guys build on Ethereum? Maybe we'll go to Robert for that one, just to start off.
I think the biggest advantage of Ethereum is that it's relatively welcoming to developers. Solidity is not that different from languages that people know. Viper is an alternate language that people are able to use. You know, it's hard to write, you know, extremely safe code, but it's extremely easy to write code that can interact with any other smart contract on the blockchain already. And, you know, people are able to get products off the ground, to test them, to experiment with them relatively quickly in financial applications. And the biggest advantage that, you know, building on Ethereum has is there's already a landscape of applications to plug into, you know, that are permissionless and open. And, you know, it allows someone to go to market without having to negotiate, without having to strike partnerships, without having to like ask anyone's permission or ask for favors. And that's really magical, in my opinion.
Hayden, you look like you want to chime in there.
Yeah, just, you know, my personal journey in this is maybe meaningful here, which is like, you know, Uniswap was essentially the first computer program that like, or it was basically my first computer science project. And, you know, I came into the space trying to learn Solidity, and the project that I kind of selected to try learning ended up becoming Uniswap. And what was so incredible to me was, you know, like Robert said, it's not that complicated to write Solidity smart contracts. So I was able to, you know, write smart contracts that whatever allowed you to swap between tokens and deposit liquidity. And what was so incredible is that other people could use them and trust them without needing to trust me, because, you know, they could see the smart contracts as open source. You know, I paid most of the grant I got. So I got a grant from the Ethereum Foundation to kind of fund some of the development. I paid almost all of it or most of it to smart contract auditors to kind of verify some of the properties. And so no one needed to trust me. But then those smart contracts, but I developed them, and then those smart contracts ended up trading, you know, over $1 billion before we moved over to V2. And so just like the fact that people can kind of trust the code without needing to trust the developers is pretty incredible to me.
And Rune, you have a similar kind of history where I think I was, again, reading in The Infinite Machine that you started working on these projects just by yourself, met someone on Reddit who kind of helped you with the code. And before you knew it, you had something called MakerDAO, and a few years later. And today it has over 1 billion locked in capital. Can you tell me a little bit about the experience of building on Ethereum and why it's so easy to build, kind of touching again on your first ICO or with Augur and all the initial projects that Ethereum brought on?
Yeah, I mean, the way I got really drawn into it initially was also in the same vein as Hayden and Robert, like the ease of getting into it. What's funny is I remember back in those early days, Ethereum was really like branded, like, you know, like marketed in a sense as this is so easy, anyone can do it, you know, build a bank in 5 minutes, just write some code, you know, ship it and it works, you know, and I actually did that. I didn't even know the code, and still somehow like I just read some guides and I actually made a stable coin that worked. I even made like a front end and got it running on the testnet and everything. And it was great. And like, yeah, I made some posts about it, and that was then what actually started Maker, because some other people got interested in it. And then along the way, it was, you know, it was pretty good getting some other people in there, because very quickly, you know, this fledgling team that would become the Maker team started like realizing, wait, so this is not necessarily super safe, like a lot of the stuff, right? Like there's kind of like this indication that things go wrong, but we never actually imagined that we would see something like the DAO hack then happen, you know, 1.5 years later, and just totally like ending the meme that, you know, go ahead, write some code and ship it, right? But in fact, sort of turning the whole thing on its head, and also like getting, you know, like getting us to the point we are today, where, as Robert mentioned, right, Solidity is like a language that's like built to be really easy to write. It's not really that concerned about like security necessarily. That's kind of like something that's been added to it later, right? And that's kind of funny, because today that's what it's all about, right? The only thing people care about is how to make it secure. But ultimately, I actually think that just like, so you could look at that as saying, it's like, well, okay, so Ethereum was like built the wrong way or something, like they didn't know what they should actually optimize for or something. And the thing is that like Ethereum was literally the first project ever doing anything like this, right? Like everything else that's come since is like a clone of Ethereum, right? And there's not really been like a similar kind of like leap beyond what Ethereum did with what came before it, right? It's just been like copies and sort of iterations on Ethereum, right? And of course, Ethereum as being the very, very, very first one is basically gonna be pretty much like rolling the dice on the random sort of way that things are stitched together and built together. And the thing is also, there's been 5 years of, I don't even know how many people, right? Just like constantly building on top of this, constantly like figuring out the tools to get around the quirks, to deal with the issues, and ultimately, and most importantly, where we get to in the end is sort of like to really understand what is it that makes Ethereum special is like, yeah, like the point Robert also made, right? That it's really not about the tools or the tech. And in fact, I guess you can say the fact that the tools and the tech is a bit quirky and sort of like, it's clearly a result of this being the first ever project of this kind. That I would say that that's actually sort of argues in favor of the strength of Ethereum, because in the end, it's the community and it's the network and it's liquidity and it's sort of the existing familiarity and just like the existing ecosystem that is all of the value. Like, and that value is just, you can't compare it to like the value of technology. It's something that's even more crucial than that, right? It's and that's why Ethereum just keeps killing it, right? Because just you can't even, there's nothing like it. Yeah, I mean, we in the Maker and sort of me personally, we actually like we thought that quite early on, and that's why we thought that the stablecoin was so important, because it's going to be you're going to be in a really good spot if you make provide sort of an infrastructure on a network like Ethereum, where all of this connectivity and liquidity and network effect is going to end up being built over time.
For sure. Kind of taking a step back at the DeFi space in general, or Ethereum, just preparing for this conference and some other articles we've been working on in-house. I've been looking at some of Vitaliks posts from the early days, and a lot of them are about financial contracts that you guys are building yourselves. He had this vision 6-7 years ago, wrote about it, got people enthused about it, and here you are, the builders of these dApps that I can take out a loan with Ether anywhere and go buy something permissionlessly without a bank. So that's just pretty novel in and of itself. And that kind of leads me to, like, I guess the general question is, has Ethereum always been about DeFi, or is it just we're waking up to it now? Has this last spring and like a DeFi bull run, as you could say, waking us up to what Ethereum is really about? Or is Ethereum more than that? Is Ethereum really about socks and crypto kitties and everything in between? Hayden, can we jump in with you there?
Yeah, I think that it's about both and everything. I think DeFi is definitely what Ethereum is about, and I think that socks and crypto kitties are a part of that. One way to think about it is like, are we like, we're building a decentralized financial system that kind of supports a new kind of type of digital asset or token. And so building a marketplace or a lending protocol or a trading protocol that also supports digital socks and this long tail of use cases. I think we're moving towards a world of mass tokenization, where everything that has value is going to be tokenized. And at the moment, it looks like Ethereum is at least in the lead in terms of where it's going to be tokenized. And then having all these tokens, one really strong advantage is that they can all share common infrastructure. Right now, if you have a sock, if you're trading socks versus or Starbucks points or airline miles or Fortnite points or whatever it is, everything is using like its own separate infrastructure, and it's all closed off, and you can't move between worlds. And I think that the idea of DeFi is saying, well, we can build like one financial system which uses standardized currencies and standardized digital asset types that lets everything use the same infrastructure. And if you make that permissionless and allow anyone to use it and anyone to participate, you get this like really powerful global marketplace of value and of tokens. And I think that's what we're seeing start to happen. Definitely something that really excites me.
Yeah, I think we'll just keep going in the order that we have so far. So I guess, Robert, where do you see this narrative, I guess, to use that belabored term? Has Ethereum always been DeFi and we're just waking up to it now, or is it more than that?
Yeah, so it hasn't always been DeFi. It started off with a real generalist mindset that it would be the world computer, that it could run any and all applications that can make use of each other, that, it's accessible by everybody, and that, it's a foundation for new applications to be created. DeFi, in my opinion, is the first sort of like sector of applications to really get product market fit on Ethereum. And one of the reasons why, in my opinion, that DeFi works so well is because, it adapts to the sort of like circumstances of the blockchain. For better or for worse, right now, Ethereum, it's relatively slow and relatively expensive. And financial applications, running on top of Ethereum might be relatively slow and relatively expensive relative to other, applications on Ethereum, but they're extremely cheap relative to the traditional financial system, where, even though, a transaction might cost $2 and it might take 45 seconds to mine, that's so much radically better than the existing status quo financial world. Now, that's not great compared to a video game, right? If you're trying to use, Ethereum to like play a video game, you're basically comparing it to things that are almost entirely free for transaction processing and much, much faster. And so that's why I think DeFi has found the fit here, is because compared to the alternatives, it's just that much better. And so I don't think it'll be the last sector to gain sort of this like traction and product market fit, but it's definitely the first.
Bruno, I want to pass it on to you, but I do want to note that you've been in DeFi perhaps longest for a product itself. Compound came along a little later, Uniswap came along a little later, but Maker's been there since 2015, right? So have you always seen Ethereum as a platform for decentralized finance, or do you see it also as a bigger implementation for a global economy, like Robert and Hayden were saying?
I mean, in the early days of Ethereum, it was definitely the narrative at the time was certainly that it could be used for many different things. And I seem to remember in particular that Vitaliks seemed quite passionate about this. Let's not have it be all about money. Let's not focus so much on the money. Let's like think about how can we also help people, right? Like this is about technology that can change the world and so on. So I just remember that he specifically always wanted to like hold on to that this whole concept that it's not just money, it could do a lot of other things as well. I mean, from my perspective, I think exactly because of the argument that Robert made, it's been pretty clear that like basically money and finance is always going to be the low-hanging fruit for blockchain, and it's always going to be like the fit that makes sense. And I mean, if you look at Bitcoin, right? I mean, that is kind of it's also just like money moving around on blockchain. Right? That's still where it's acceptable to have this incredible overhead that you have to pay if you want the same stuff to be computed thousands of times again and again, right? Sort of redundantly. So yeah, I mean, I'm not at all surprised with the sort of the direction things have gone. I am kind of surprised with like the whole DeFi like meme or narrative, I guess you can say, right? I mean, Maker's so old that Maker existed long before there was anything called DeFi, right? In fact, I'm pretty sure that the term DeFi was coined by, I think, like the Dama team or something like that when they were doing, we were doing this like side event to DEF CON in Prague, I think it was, and then it was, it was going to be called DeFi. Sure, that sounds cool. And then suddenly it turns out that this sort of small word DeFi just somehow like sounds really good or something, and people really like it. And I mean, before we know it, I think now there's this talk about is DeFi just going to become the new phrase that like describes what's currently referred to as either crypto or blockchain? I mean, we're certainly seeing right now, I mean, and this could very well just be a fad, right? But like today, if you look today, like anything that was doing a coin or blockchain, you know, a couple of months ago, they're not doing a DeFi, right? It's like it's not even like a real, you know, it's like this amorphous concept where just anything is a freaking DeFi right now, which is great, right? Because that shows that there's some traction, there's some excitement, right? And that also does come from the fact that this, to Robert's point as well, right? That this is the one place, you know, there has been some real value created here, right? And there has been some like actual cool things that make sense. And it's more than just, let's say, ICOs, right? Or speculation, right? There's actually, yeah, I mean, of course, it's to some extent compared to where we're going next, it's still not really, like, we still just scratch the surface of what this technology will do, but it's, I mean, it was certainly like, I think, you know, it's like a special moment when people realize that, okay, you can, you know, you can borrow with Maker, for instance, you can earn a return on Compound, and you can like trade automatically on Uniswap, for instance. And the fact that you can sort of, you can actually do these things and it works, and you can do it right now, and you can tell your friend to do it and they can try it as well. That's, I mean, that is very powerful, right? And then what's happening in these last couple of months is just, now somehow there's this second wave of the narrative of the idea. It's kind of like catching up to the fact, okay, it was cool brand, and there was some real use, and there was some real growth, and now we have this like crypto excitement is coming back, and it's being funneled towards this particular space. And then I wouldn't be surprised, you know, if then that just becomes everything, right? Like everything just like finds a way to sort of like position itself in that new narrative.
So Robert, the last time I saw you was at Zero Expo in San Francisco, and I remember on stage you kept saying one thing over and over again, which was that Compound is not going to launch a stablecoin, if I remember that correctly. Am I right there?
Yeah, you are.
Yeah. So since then, we've seen the world turn upside down, and then do a few loop-de-loops in between also. And one of those loops was DeFi launching, becoming just like a mainstream meme. DeFi Spring maybe could be something we could call it. So from your perspective, if you were going to go back to Robert Leshner of 6 months ago, what would you tell yourself? Maybe from a technical position, maybe from a leadership position in your community, maybe something in the macro picture you didn't quite understand about your project or other projects. Just kind of putting yourself back 6 months before all this crazy stuff happened on Ethereum.
Yeah. So if I could go, you know, to 6 months ago, I would sort of have the same message and the same advice as I did then as well, which is the space is moving incredibly quickly. And that's both a blessing and a curse. Sometimes security gets forgotten when it gets caught up in the excitement of like, you know, new products, new features, you know, high returns and all of these things. You know, the thing I would sort of stress to the community in the midst of DeFi summer is that, you know, security is paramount. Writing smart contracts that are safe, that protect user funds, and don't have vulnerabilities should always come number one. And it needs to be the balance to the extreme enthusiasm that's starting to occur. And I think the community should, you know, spend more time talking and asking about security in everything that occurs. In every new feature launch and every new product, you know, I think it needs to come back to being first. You know, the DAO hack many years ago, you know, slowed down DeFi by years in a good way, right? And I think the community needs to never forget that. This generation, you know, wasn't around for the DAO hack. And so, you know, in the midst of this DeFi summer, you know, I would, you know, want to go back and just, you know, let people know that there's going to be mistakes and there's going to be flaws, and that they can be prevented. But we as a community have to, you know, keep our standards incredibly high.
We're going to pitch it over to you now. In the last 6 months, we've seen Maker go a lot of different places. We saw some liquidation and collateral events in March. And then today, I'm just like looking at DeFi Pulse right now, and you guys have 1.12 billion locked on the network, which is just insane. And then you also have a lot of outstanding demand for DAI on tons of different projects like Augur, which just added compatibility for your stablecoin or the stablecoin that you helped create. So if you're going to go back 6 months ago, maybe from a macro standpoint or a leadership position, what would you tell yourself?
I don't think that there's really, even with the knowledge of all the stuff that's been happening over the last 6 months, I don't think that that would be necessarily that useful, because the problem is really that many of the all the sort of like the challenges and the just like what's happening now, like sort of the situation of this incredible growth that the whole space is now facing. That's all something that we were prepared for, and that we counted on, and we expected to happen. We just didn't think it would happen so fast. Because the problem is there, you need to sort of build a certain number of things and prepare a certain number of things to sort of deal with the actual challenge of scaling from a DeFi experiment to a DeFi critical infrastructure and so on, right? And which most importantly means that now you can't just like fail or shut down or something, right? Wouldn't be good if Maker suddenly stopped working or something tomorrow, right? Like that's obviously the most important thing, right? Is this like stability, reliability, the fact that it's being built on, people are counting on it, and so on. And that's always been the goal, and the main objective from the very beginning. That's always how we've seen it, that Maker is all about like building this core infrastructure that can be relied on by others. And the plan had always been to try to maximize that resilience and try to really like make it as strong as it possibly can be. With sort of taking the path that will get us to that point as soon as possible, and even culminating in the dissolution of the foundation, which is really seen as like this is the critical moment where we achieve like full Maker independence, right? Where the community really has total control of the resources. They have all the tools they need. They have no dependence on external entities or individual parties or anything like that. And then what ended up happening is just even more extreme growth and sort of like sudden exponential sort of pickup of the space than we had expected, basically. I mean, so it took us about 2 years for Maker to get to 100 million DAI in circulation. And then, after those 2 years, we then launched multi-collateral DAI, which launched with Ethereum as collateral, and then also like bet that one new collateral type to sort of test out this multi-collateral thing. And then from then it took about, I guess, 5 or 6 months or something, and then the system hit 200 million DAI in circulation, and then it took about 2 weeks, and then it just hit, it hit 300 million DAI in circulation this morning, European time, and in the evening it hit 350 million, and actually just not so long ago, this this extraordinary meeting of the community where some of the community members get quite together, and they basically had this expedited meeting to talk about what do we do in terms of like changing the system parameters so we can accommodate even more growth in supply, because it's just completely exploding right now as we speak, basically. Yeah, and that has been a crazy situation to be in, and I guess, like I said, I don't think that there's much we could have done to prepare for it differently. I do feel that like in general, while it's pretty crazy to be in the middle of all of this, I do feel very relaxed or like confident by the fact that there's just way more professionalism in this whole space than there has ever been before, right? And I especially feel that, of course, internally in like the Maker community and the Maker Foundation and the people I work with myself. But I even think like more broadly, it is just like a grown-up, more grown-up industry. And I also think that that's a way that if you look at the DeFi sort of brewing, a DeFi bubble, or rally or bull market or whatever people are talking about now. I mean, I think there's a lot of parallels to draw with 2017, but I would also say that there is going to be a bigger level of substance and sort of like real value there, and a little bit more maturity and professionalism than we've seen in crypto before, and that's really good, right? That's where we need to go.
Yeah, Rune, to your point, I think over like after the 2017 run and into the 2018 bear market, there was just like a lot of professionalism built up within, and a lot of people started like working on projects by themselves. And maybe Hayden, you might be one of the best examples of that, creating Uniswap and then the last few months launching V2. So maybe can you tell us a little bit about the last 6 months for you, and what would you change if you were going to change anything over the last 6 months? What did you learn over the last 6 months? Maybe tell us a little bit about V2 and the success you've had with your project.
Yeah, definitely the last 6 months have been pretty crazy for Uniswap. It's gone from, trading about $1 million a day or a few $100,000 a day to more recently trading about $100 million to $150 million per day, is what it's been doing in the past week or two, which has been pretty, unbelievable to see. I think that, I don't necessarily think I would have done anything too different over the past 6 months. I do feel I don't have any like major regrets. I might have gone back and, started working on some problems that we're kind of starting to look at more now, a little bit earlier. Something we've started to see is like a proliferation of tokens. So about 30 new tokens are being added to Uniswap every single day right now. And, it's so something that's something that maybe Uniswap faces uniquely, or not uniquely, but something that's very different, a very different problem that Uniswap has relative to something like Compound or Maker, which have and a concept of pooled risk, and so you're always going to have like some sort of limited subset of assets where you care about. Whereas Uniswap is like basically anyone can add any new trading pair, and that presents some really, really, really unique challenges. Both like the quality of the token contract can create issues, but also just like, how do you discover what tokens are legitimate and what ones are not? What we've seen with these DeFi tokens, every time a DeFi token spins up, 2 or 3 fake versions of that token are put on Uniswap at the same time to try to confuse people and get people to buy like the wrong one, or and so we're working on some interesting ideas on the front, in order to kind of discover and figure out which tokens are real and which ones aren't and which ones have value. So that's maybe something I'd start working on a little earlier. I would definitely tell myself 6 months ago our full design for Uniswap V3, which we're working on right now. Which I can't reveal too much of the details. We're probably going to announce it in another month or two, hopefully. But what I can say is that there are I don't know. It definitely starts to tackle some of the kind of issues that people point out with Uniswap, which is like capital efficiency, execution efficiency. There's definitely the things people complain about like slippage and how much money you need to put in the contracts for kind of the amount of value that can transact. There's some of these sort of like core issues, and while we've seen other projects kind of experiment with these designs, we've seen more automated market making projects kind of spin up recently. We have a very interesting solution that we're working on, which we think is kind of very unique, and will kind of push the space forward. So we're very excited about that. And so yeah, I wouldn't mind having a 6-month head start on that as well.
Sure. So kind of taking a step back and looking at the panel in general, I think we're about a half hour in, and before we get to some audience questions, this is about unbanking people. Like, you guys are making bankless projects, right? We don't want to get Wall Street in here, but that doesn't mean you don't have anything to learn from them. So over your experience, maybe over the past few years or over the last few months, what have you guys taken away from your studies of the banking ecosystem or anything in the current traditional financial markets? Rune, maybe we'll start with you there.
Yeah, I think this, I mean, you could say this question applies really well to Maker, but maybe the premise of like Maker being bankless is, it also becomes a little bit more nuanced, because like the really big takeaway that the entire sort of Maker project has gone through, actually from its very inception of like the very early days, and started to thinking about this multi-level design, and just like maturing and becoming more aware of what it will actually take to scale. It's just continuously been like learning that, okay, actually a stablecoin is quite similar to reinventing how finance already works and how money already works. And there's just so many parallels to draw that you know, it really does make sense to have the traditional system be the starting point in many cases when you think about like what is it that people want when they're engaging with financial tools, like what are they actually trying to do and so on, right? And it may, you know, most of the time it makes sense to try to replicate that as much as possible. But Maker kind of takes it a step further, because for us in the Maker community, it's not just about, you know, replicating like what they're doing out there in a bank or in the financial system, and then replicating that with some code and doing it on the blockchain. It's actually a lot more about, I mean, this is what, especially in the foundation recently, it's a lot, what we're really focusing on is how do we connect what already is done with Maker and you know, sort of the protocol pretty much as it already exists. How do we connect that out into the real world and actually connect that to, you know, to banks and assets on their balance sheet, or special purpose vehicles, or stocks, or whatever, any, you know, any real world asset, any real world economy or market, because that's, from our perspective, that's actually what it will take for DeFi and for blockchain to get real. Like, it's about getting into the real world and sort of escaping the, what I would think of as like the crypto bubble, kind of like this ecosystem that exists right now, where things are kind of like, you know, most of the stuff is happening inside the bubble, right? And things kind of like stay within the bubble very often. It's actually not so often that you see crypto really like reach outside of the bubble or like connect out of it. But the next stage, and this is what I think DeFi will really you know, bring to the table, or like create, and especially Maker even, right? I certainly hope that Maker will be the big you know, ice-breaking ship that's gonna really open this whole thing phenomenon wide open, right? By making it possible to take all of the efficiency that exists within DeFi, all of the innovation, all the transparency, security, just all of the advantages, and then applying them in the real world to real problems, so that DeFi really becomes about providing actual solutions for real people. And I think that's incredibly exciting. And there isn't really a place to start in terms of like, what can you learn from the traditional system? Because to some extent, it's about like systematically applying DeFi and blockchain to every single aspect of what's there right now. And I always think of it as like, it's not about a revolution, or like, it's not about like pulling out the rocks around the banks or something, or burning them down or something, right, and building something new. It's about like removing the bad and enhancing the good. Like, there's some bad things in the current system, and there's a lot of opacity, and there's a lot of corruption even, right? There's also a ton of good stuff, and there's insane amounts of scale and complexity, and, you know, just like thinking and all of those things can actually be you know, built upon with blockchain, and actually enhanced even further by sort of using the, you know, putting the technology into the places where it really makes a lot of sense.
Robert, let's turn to you. Just as a lending platform and a place to acquire interest on assets, what does Compound have to learn from traditional banking system?
Yeah, so the things that don't work about the traditional system are, and Rune touched on a lot of these, it's opaque, it's expensive, it's slow, you know, there's a lot of, you know, annoyances. You know, there's a couple good things though, and these are the things that we're trying to port into Compound. There's three things: safety, scalability, and predictability. You know, in a lot of ways, that means we want Compound to be boring. And the things that work best about traditional finance are the things that you know are there, you know they work, and they're really not that exciting. And that's in a lot of ways our vision for Compound. We want it to be extremely reliable at scale, where, you know, you'll notice some of the experiments that, you know, Compound has been conducting as a protocol and as a community. It's really designed to conduct experiments in, can you supply, you know, $100 million of assets and begin earning interest on them immediately, or can you borrow $100 million of assets instantaneously and know that the entire system works? And that's really, you know, the best part that, you know, we're able to replicate as a community and as part of DeFi is, the primary complaint against DeFi from like traditional thinkers are like, oh, it's so small, it's a toy, it's unsafe. We're trying to challenge each of these critiques one by one. And to create, in essence, an extremely boring product that any institution, whether they're in the old world or the new world, or they're a crypto custodian, or whether they're, a startup wallet, whatever it is, they know that they can build on top of a protocol in DeFi. And that's when I think we see this really, 10x from what we have today.
Yeah, just responding to that as a reporter in this space, I kind of hope DeFi never becomes boring, but this is my take. Hayden, I'm gonna move over to you because Uniswap is so novel. Like it couldn't exist without this tokenized world. What can Uniswap pull away from the traditional markets?
Yeah, I think that, there's a few things here. Like I definitely gonna echo what Robert and Varun both said, which is it is about finding what are the strengths of the traditional world and what are the weaknesses, and kind of applying those to crypto. Trying to take some of the strengths and sort of integrate them and incorporate them, and then sort of expanding on their capabilities by sort of exploiting the weaknesses of the traditional financial world. I see that as the best way to kind of grow DeFi. I do think what kind of Robert said about like security and predictability. I think that at least in the United States, not maybe everywhere in the world, people have a very high degree of confidence that they'll if they make a small mistake, they might be able to get their money back still. Chase is in the background, like freezing your account so that before someone is able to steal it. So like all that stuff is like a lot more sophisticated in the traditional financial world than it is in crypto right now, where it's like if you make a mistake, it's gone and you have no recourse very frequently. So I think that that's an area where definitely we in the DeFi world can use a sort of, or can kind of take inspiration. However, I think that where the DeFi world excels and is able to really outcompete the traditional financial world is in a number of areas. So one area is definitely like permissionless asset creation and permissionless marketplace creation, right? And so right now there's more, like I said, I mentioned earlier that there's 30 tokens added per day to Uniswap. If you want to know how many days are added or how many assets are added to Nasdaq, it's less per month basically than it is per day on Uniswap. And even with this like tiny subset of users using DeFi right now, and even with gas prices being absurdly high, and so like asset creation, marketplace creation, other kind of areas that are another kind of area that Uniswap sort of starts to expand on right now is market making. So right now, participating in market making in sort of like on Nasdaq in the real world is done by very few, very wealthy, very like centralized groups, and not very many. And your average person can't engage in those types of activities just because it is like kind of too sophisticated, and it's sort of all like background deals and like like Robinhood is selling priority access to its order books to kind of other market makers, and it's all sort of done in the background by like a very small number of parties. And something that you can do with smart contracts and something you can do with Uniswap is permissionless liquidity provision, automated liquidity provision, so that really anyone can issue an asset and then provide liquidity for it themselves, and they don't need to be highly sophisticated. Something that we can work on is sort of making it. I think that and this is something that we can kind of take inspiration from the traditional financial world, is kind of packaging maybe slightly more complex things in more digestible ways to kind of even significantly further lower the barrier of entry. And so what I'm thinking of there is like index funds, where index funds make investing incredibly easy, even though behind the index fund there's like a ton of different things that go into it. And so I do imagine that with market making even we can kind of even further kind of reduce the complexity, so people can kind of just like pool their money. It's just earning them a return. They don't need to think about it. And in the background, it's kind of like replacing these highly centralized, highly profitable professional market makers. So I'm very interested in kind of exploring that into the future.
Awesome, thanks for that. So I want to turn to Eth2, of course, because ETH is 5, but ETH is also turning 2. Hopefully this next fall, fingers crossed. We know that There's a few different test nets. Yeah, Robert's definitely feeling that, right? So I want to turn to you guys and ask, from a dApp developer's perspective, from a DeFi developer's perspective, what are some things that you know about from Eth2? Because I think a lot of people don't understand that there's so many different people, so many different teams working on different things in Ethereum. The Eth2 team is way different than the people working on DeFi, and they have no connection. But I think that just kind of gets lost in all the magic going on. So, but from your understanding of Eth2 and what you're watching with that project, what is a hard line or something that you need to see in Eth2 that you need to see going forward for your projects to succeed? Robert, I feel like you have a thought ready for that one.
Yeah, so first off, extremely excited for Eth2. At a minimum, I think it'll relieve a lot of congestion in Eth1. I think over time, we're going to see more and more use cases slowly migrate to Eth2. The thing that's needed for DeFi to move to Eth2 is really that composability that makes Eth1 magical to exist. And I haven't really seen how this is going to play out yet. There's a lot of theory right now about how you can have one set talking to another set and like all these things, but like that composability needs to be there. And it might happen in fits and starts. You might see some applications moving on to Eth2 and there being this island of new tech. And you might see assets start to move onto Eth2, and you might see some like porting of like the value of different tokens that's been created. But really, I think for DeFi to succeed, it's going to have to be able to replicate that existing magic that exists right now on Eth1 that no other blockchain has.
Yeah, that's interesting you bring up the other blockchain part, because last spring I've covered probably 5 or 6 different blockchains that are trying to do what ETH is doing with DeFi. But that's a whole other conversation, so we're not going to go into it if that's okay. Yeah. Rune, can we jump to you for that question? What is something that Maker needs to see on ETH2 from your perspective?
Yeah, I think I have a bit of a different view of Eth2 than most people. I mean, because so I actually, like, basically from my perspective, it doesn't really, like, there's a bigger, how to say, like, there's a bigger disconnect between sort of the ETH shard that everyone is building on right now, and then this sort of like vision is Eth2 is just somehow it's what's already exists, and then it's just more scalable. The end, right? That's kind of how a lot of people, like, that's how what people think of it as. But the reality is actually that I think the entire challenge of scalability is not, it doesn't even really sit on the blockchains, it sits on the apps themselves. So it's not really, like, it doesn't really matter what Eth2 looks like or what is built into the different blockchains or whatever. Like, what matters is what it's going to take for like the Maker protocol to be able to, for instance, have vaults opened on a different shard than the one where the primary governance layer sits, for instance. And that's just like, I mean, that's like that's a problem that's even further away, basically, than even like Eth2 being finished. And I actually even think, I mean, I think that the fact is today, rollups are already available, right? So as far as I know, and admittedly, I don't actually know that much, but like, I think I am pretty confident that the functionality of like this kind of rollup is not really much different than, you know, how an Eth2 shard is going to look like. I guess you can't do the same level of like coding and stuff on a rollup right now, but I think that that's also going to be possible in the future. But my observation is that these rollups are not being used at all, really, which I think is that's a little bit surprising, but I think that actually shows that it'll be a lot harder than what people think. Actually, I mean, and that's entirely to Robert's point, right? So basically, I just agree with what he said, right? That like the atomic, you know, the atomic possibility, the fact that you can build things together in the way that you can on the main Ethereum shard, that is kind of the magic to a large extent, and that, I mean, it's going to be a big challenge, and it's going to be. I ultimately think that the only way it's going to be possible to replicate that is it's not going to be through the underlying blockchain somehow figuring out how to do it, because I don't think that's even really possible. It's going to be the apps themselves somehow like starting to build in some sort of asynchronous way or something, right? So we can get some sort of new paradigm for how we build our apps in such a way that they can seamlessly, you know, interoperate even when it's not atomic, and even when it's from one blockchain to another. And I also think once that reality happens, then because it's happening just as much on the app layer as it's happening on the blockchain layer, I also think that that does open up for more of like a multi-blockchain world, right? I mean, I still strongly believe that the rollups are going to be the first ones that get filled up. I have a hard time imagining that like they won't get filled up with activity, but some other random thing. I mean, even Eth2 would happen, just because they're available today. So that's where, if people need scalability, that should be where they'll be focusing today. So I would expect that's where we'll see like the next frontier of scalability.
Aiden, turning towards you, maybe from a Uniswap perspective or just someone who's interested in the space.
Yeah,
Go ahead. Sorry.
Okay, I was gonna. Yes, I know. Okay, so I'll just go. Okay, so first I'm gonna just like quickly say that like Eth2 is many things at once. In fact, there's like 3 specific like phases of Eth2. And I'm also gonna mention that I think that I'm very bullish on Eth2, and I'm also very bullish on optimistic rollup. And there's kind of a way that it all interplays together that I think can give you much of what we have on Eth1 today, but in a more kind of scalable context. So when people talk about Eth2, they first talk about proof of stake. That's kind of this initial phase 0, and then they talk about proof of stake coming to consensus on like data on shards, and then the phase 2, which is like the most nebulous one, is like proof of stake coming to consensus on execution on shards. Now, the kind of optimistic rollup solution is a layer 2 solution that only needs data availability on the main chain, and execution happens off chain. But otherwise, what Rune kind of said about it, kind of giving you a lot of, you can basically build general purpose smart contracts on optimistic rollup is true, and it can happen. And so, what I'm kind of expecting to happen is Eth2 phase 0 and phase 1 are both very well defined at this point, and they're really just in the implementation stage. It's only really phase 2 that people talk about being like extremely nebulous and hard to build on and complex with all these cross-shard transactions. And so my hope is that, and my belief is that over the next 1 to 2 years, we're going to see much more sophisticated optimistic rollup chains spin up. And what optimistic rollup can give you is, within an optimistic rollup chain, you can have composable smart contracts, written in a language like Solidity, or Solidity itself, and those kind of optimistic rollups can leverage shard chains for data availability. And I'm expecting, I guess maybe on the higher level point here, is that in order for something to kind of replace Eth1, it has to kind of do what Eth1 does, but better, which means it has to still let you just like spin up a new smart contract easily. It has to let those smart contracts be able to interact with other smart contracts. And I do think that like, layer 2 leveraging the first 2 phases of sharding, but not the third, is really where we're going to see like the magic happen, and where we're going to see, applications that can do thousands of transactions per second, that still kind of have the DeFi magic. And I'm expecting that to happen by, end of 2021 for sure. In terms of like, I do know that there are several projects at the moment in the kind of optimistic rollup space that are working to have, full Solidity smart contracts, where you can just like compile the smart contract to kind of, some sort of other kind of format, basically, that kind of lets it be based on like optimistic execution games, whatever. But long story short, I think that for, I don't really think of it as like Eth2 is this standalone thing that like we're either going to join or not join. I think that like the whole space will kind of move to a solution that works. And I don't think that anything will be able to replace Eth1 unless it can do what it can do better.
Awesome, thank you. So we got about 5 minutes left. I think I want to touch on 2 more questions, one from the audience and one from me. First off, kind of going back to the Eth2 point, there's staking returns, which basically means that the Eth2 network is going to give you funds for putting ETH deposits into the contract. And that's a way of validating and making sure that the whole Ethereum base layer works itself. From a DeFi perspective, how do you even compete? If you're going to get more ETH from staking, why would I put my ETH into Maker? Or why would I put my ETH into Compound or swap with Uniswap? Robert, can you bring us with that one? Bring us up to date on your thoughts.
Yeah, so there being a native return on Ether is a great thing. It gives a lot of reason to hold Ether, and it really adds a whole level of economics to the system that doesn't necessarily exist today. You spend gas to process transactions, it goes to a miner who sells it, and the whole thing just sort of like spins in a circle, and no one's incentivized to make transactions cheap, and Ethereum is where it is today. That return on Ether, though, in 2.0 doesn't come from nowhere. It comes from the risks and the work you take processing and validating transactions. And that's not riskless, and it's not free. You have to provide a service to the blockchain. And I do think that in some sense that's competitive for a use of Ether. Ether is going to be in one place at a given time. It's going to be used for proof of stake, or it's going to be collateral in a DeFi protocol. And I think it's going to be slightly competitive because it's a whole new use case for Ether, but I don't think it's going to be a wholesale replacement. There's still a lot of people that want to use their Ether to borrow DAI or to borrow another asset from Compound. And so I think it's actually going to add a lot more nuance and opportunities to the ecosystem. You might see, there being like more of a base interest rate on Ether in systems like Compound, where if anyone's able to borrow Ether and put it to work, there might be more demand for Ether through the interest rate markets. And so I think 2.0 is going to add a really interesting economic design to the entire system that's going to make it a lot healthier. And check back in with me in like 2 years.
Oh, I'll be back. Don't worry. Hayden, I'm going to jump to you really quickly, and then we're going to finish with Rune on that same question.
Yeah, just I'll quickly say that I think that definitely different protocols have different risks, and different people have different risks, or risk tolerances, and kind of the general framework for interest rates is the more risky, kind of maybe the higher the interest rate, but then obviously you're taking on more risk, and the way that's all worked out is that if something is less risky and it has a higher rate, then people will move to there until it's arbitraged. And so arbitrage basically is just this magic thing that kind of makes everything work. And if Ethereum is paying out $100 million in ETH per year to kind of block producers, then there will be ETH that kind of comes in and fills that role. But similarly, if there's demand for lending, people will come in to fill that demand, and rates will kind of get arbitraged out based on risk. So I don't really see it as kind of competitive. It's we have government bonds, and people still kind of invest in them despite there being despite there being index funds and market making and all these other things. And so I don't really see it as competitive. I definitely see it as something that brings a lot of new value into the space. And yeah.
Okay, non-issue. Rune, let's finish off the question with you.
Yeah, why not both? Staking pool tokens as collateral, right? That means you could, well, in short, right, it really means that you can give your ETH to someone else you trust, and they can then stake with that ETH, and you can get a token in return, and that token earns a portion of what they're staking, just like a mining pool, but it's a staking pool. Then you could actually take that token and put it into Maker, for instance. There's some downsides to this, of course, right? So first of all, there's extra risk to staking, and there's extra risk to trusting someone else to stake for you. And that then also means that if you're trying to use this kind of token, DeFi would actually be more expensive, right? It would be there would be less people, less places and platforms that would accept it, and the rates would be higher compared to using hard ETH, right? And another downside is that it could lead to some centralization, essentially, right? Where we see these massive staking pools that have an advantage because their tokens are, or can be used as collateral. But then I think in turn that also creates this sort of opposite effect where the DeFi projects will tend to prefer having a sprawling ecosystem of staking pools because they like to diversify their exposure, right? So you'd much rather have 10 different staking pool tokens as collateral than you'd have just one mega staking pool that is threatening a whole network. But that's that's really how I expect it to evolve. Like, I really think that I guess I'm a little bit less on Hayden and Robert's side, that like people will be fine just watching others mining, staking and getting that money, and they're just sitting on the sidelines and not getting anything. I do imagine that pool staking is going to be very, very popular.
Awesome. Well, just to round out my last question for you guys as the hours come to a close. This has been compared by a lot of people to the new ICO boom, or this has been compared to just like, it's just like a new way for Ethereum to take off. So just wondering, from 3 top heads of the DeFi networks out here, among others, what personal token are you guys putting your money on in the next 6 weeks, next 8 weeks? You can decline to comment, of course, but wondering what you guys are putting your money on these days. Hayden, maybe we can start with you.
ETH, 100% ETH.
Classic.
Nothing else.
Good choice. Robert?
I don't chill, so I'm going to refuse to answer the question.
Rune? Oh, I think we got you on mute there.
I think ETH is a solid choice,
Okay.
but also I'm really, really bad at trading and predicting stuff.
Yes, me too, by the way. Don't take my advice, but ETH.
Okay, for sure. We won't take any advice. So Hayden, Robert, Rune, thank you so much for joining us at Eth2. Be sure to follow these 3 on Twitter. They're different projects. Keep up to date with them. Of course, you can follow us on CoinDesk, where you'll see interviews and talks with Hayden, Robert, and Rune, of course. Thanks, guys. Talk to you soon.
Thank you.
Thank you.
Thank you.